Over the racket of endless ranks of sewing machines, workers at this Shanghai textile exporter churn out lingerie samples to fill the 25% increase in orders the company has booked since 2019. But the rise in the value of the Chinese yuan, it was up more than 6% last year alone, has cut into the company's profits severely, leaving them barely the same as those of 2 years ago. Announcement of the newly raised reserve requirement ratio for foreign currency deposits has already started to help.
The RMB started to appreciate last July, and that has led to our profits dropping around 8%. But we've noticed that right after the announcement, the RMB saw a slight decline, down by 0.02 to 0.03 RMB per dollar. It's a good sign, but as far as our May profits are concerned, they are still not what we'd hoped for. When the policy takes effect on June the 15th, I will be booking a hedging contract.
June 15th is today, and preliminary signs are that the rise in the FX reserve rate could already be having the desired effect. Right after the PBOC announcement, the offshore yuan softened by 160 bips against the US dollar, down from its strongest point since May 2018. Today, the onshore yuan opened at 6.4067 per US dollar, slightly down in value from yesterday's close. Since last year, the booming exports and the resulting flow of US dollars into China have been pushing up the value of the renminbi. Experts say the PBOC's move will help absorb the excessive US dollar in the domestic market and keep the yuan's exchange rate stable. The policy adjustment also serves as a signal that the central bank will not allow the redback to appreciate too quickly and will act decisively if necessary.
Direct impact could be very limited because the yuan interest rate is still higher than the dollar rates. But I think the message is very clear for those speculative traders that if the yuan still gain to some certain level, what we expect probably is 6.1, 6.2. If the pace is come to this level, and probably the PBOC will still have the measures to curb the yuan gains.
Zhu says the market should expect more targeted measures from policymakers to support small and medium-sized firms.
In the past 1 year, what we see lots of policy, actually not in China, even in global, is still pretty broad-based. So lots of small, medium-sized company might not be benefit from here. So the message here is, moving forward, I think given the uncertainty of the pandemic, I think the policymakers, no matter from the fiscal and the monetary, it will continue to support those kind of small-sized, medium company. And we expect actually more fiscal measures, actually more targeted fiscal measures, actually to roll out in the coming 12 months.
Of course, companies like that textile exporter are already taking their own steps to solve the problem.
We cannot just blindly raise our prices. Our clients have all suffered a lot from the pandemic, so we are working to save costs as much as possible, and we are now in cross-border e-commerce, selling our own brand. That lets us set our own prices and make better profits, controlling everything ourselves.
China Customs says the country's foreign trade came to almost 15 trillion yuan in the first 5 months of the year, up 28% from a year earlier, and with exports rising 30%. While the central bank has seldom made use of the FX reserve requirement ratio before, the hope is that reviving this tool now will ease the problem of fluctuating exchange rates and keep those exports flowing. 张世璇 Money Talks.